And good morning, everybody. And doing the daily plan here, trying to pull up my notes. Okay, so I'm going to start off just giving a little context to where we are, and that is, like, that's not what I wanted to show. I wanted to see this. Okay. This, by the way, is my TV script, trading view, just based on the levels that you see in my daily roadmap that's available to paid subscribers. That's just a string of numbers, no fancy calculations in there, just the numbers put into a string. Um, and we'll talk about how I get these in a minute. So let's go back to the context of where we are. And for that, we can just pull up any chart. This, where is it? Okay, where was I? I was okay. We were here. Okay, this is good enough. Now this is a mentor queue, and they've got a broad suite of features and provide some decent levels. Okay, so yesterday, just for context, was one of those days where we just stayed within the tight range, stayed pretty much within the straddle. We were pretty much flat. We tested the bottom, and we had some news. We bottomed out at 59.66 ish, 65 held. That was a key level. We topped out at 90, which in my note I erroneously said was a 3 month high, but actually 95 was a 3 month intraday high a few days ago. And so that 6,000 market maker short, customer short market maker long gamma strike is still rough to get over. TLDR, that's where we at. Below us, we have 5,900. Again, customers short, market makers long. Locally, by locally, I mean in the short term, today, tomorrow, a few days from now, as well as in the June large options expiration, both the AM where the institutions like to play, where there's big open interest and levels tend to be more round numbers, and there tends to be a lot of straddles and risk reversals and synthetic longs and shorts. In the AM and in the PM, there's kind of more variability. And of course, we have the JP Morgan collar trade, which maybe we can talk about at greater length another day. But just briefly, for those of you that aren't familiar, JP Morgan has three hedge funds. The big one is the quarterly, about 40,000 contracts. And what they do mechanically is at the end of the month, they buy a put spread in the SPX that's 5% out of the money. The short put is 20% out of the money, mechanical. That's it, 5%. They're telling the high net worth people that you're not going to lose more than 5%. And unless we go below 20% in a 3 month period, their data shows that happens, 0.01, whatever insignificant amount of time that they're willing to do that. And they finance it with an out of the money call that they sell, which is currently the 59.05 call, which they sold a quarter ago in March when we were kind of getting beat up after the February all-time highs. We weren't totally beat up yet, but we were starting to get beat up. And so the 59.05 call is short. Just think of it as if you buy a SPY covered call and buy a put debit spread. It's a collar. And it's mechanical. They leave it there. They don't close anything out. That's it. So right now we have 5905, call it 5900. Market maker short calls, market maker long calls, and that's acting as support. That could also, if we have weakness, later on, that could also be a pin level. If we break down below it, we can come back up to it. So just keep that in mind. Okay, getting back to what's going on today. Volatility basically didn't move. We have VIX currently not old enough to vote or drink below 18. And if we just kind of look at the 9-day VIX, which kind of takes us toward expiration, is down at 16, 1% move. If we look at the VIX term structure just in a very loose way, we see the VIX is at, where am I at? I mean, the VIX 9-day is at 16. The VIX is at 17. The VIX 3-month is at 20. The VIX 6 months is at 22. So we're approaching a normal VIX term structure. So volatility is normal. Whatever short-term catalysts were market participants worried about have been kicked down the road for now. Um, Quick in the weeds, the VVIX VIX ratio is something that some people use. VVIX is the volatility of volatility, or VIX, or demand for hedges. It's calculated the same way the VIX is calculated on a strip of options out 30-ish days, puts in calls, etc. And the VVIX VIX ratio is simply divide VVIX by VIX. You get a number. 5 to 7 is considered normal range, with 5 low end of the range, meaning market well hedged, market participants cautious. 7 meaning market participants are kind of a little bit unhedged. Below 5 is we're scared to death, and we were below 5 pretty much most of April. And I think we were at 8 in February. And right now we're at 5.1 ish. So normal, well hedged market historically. So that's where that is. Okay, so let's get back to SPX. And then we're going to go to options depth in a minute. And if you have any questions, and also if there's people in the stage here, I got my buddy Flash here. If anyone wants to jump in the stage and speak, that's fine. I invited some of my guru friends. I don't see them though. I don't know where they went. Okay. I'll twist arms over the weekend. I'll get some people to join in. Okay, so let's get back to the main event, the SPX. Flat, stuck like Chuck. And okay, so what do I see today? I'll show it on the chart. Let me show it on. No, that's a different guy's secret sauce. That's my secret sauce. Okay. So what's going on here? And then once we look at this, I'll show you the option depth chart and how I get it. I also had some people question exactly how to use it, and Elias, one of the founders, will be on next week, I believe. Ah, Ivan, if you want to join on voice, I can send you let me send you an invite link to join on voice if you want to. If not, you can stay on YouTube, wherever you are. Everybody on YouTube there, that's my buddy Ivan. Ivan the Magnificent. I'm going to send it to you over here. I'm going to tag you. Folks out there in YouTube land, we're very informal in this neighborhood. Okay, so if you want to join in there, Ivan, you can. If not, okay, I just sent you something. Okay, he'll text me. Fine. Okay, let me get back over here. Okay. So, and we're going to look at options depth in a minute. 59.85 is the first stall point. We have customers short up here. That's the stall point. This was a high of day yesterday. Price action 101. I like to put my chop zones near the round numbers. So if we go up, we're going to get into a battle zone at 6,000 anyway. And we have this whole 59.90 to 6,000 area where, we have the stall over here. We have these price action levels here. So I would expect trouble up here if we get there. To the bottom, oh, something has happened here. Oh, that looks newsy. I don't know if there is news, but that surely looks newsy to me. Or hedging. I don't know what that was. If anybody knows what that was, text me. That kind of looks like the algos just swallowed something, but we stalled right when where we're supposed to stall for now. Now, since we're up here, here's the top of the straddle range. So we have all this crap up here at the 6,000 area, in this 10, 15 point range. Um, and if we can get, over this 6,000 area and this 59.85 customer short call can then become a supportish area because then market makers buy on the way down and they sell on the way up, and this becomes the next zone, the 85 to 6,000 zone. Extension, if we get over this mess, extension to 2025, wouldn't expect much beyond that or even that, but just for the sake of completion, putting it in to the bottom. And we're going to look at options depth in a minute for a more granular look. To the bottom. Okay, so we have the close at 70 area, 65 yesterday's low stall. Below us, there's really not much except for 59.50 customer long puts. So if we get sucked back down to the 60-65 level and price action buyers, oh, gee, Trump, hold phone call. Okay, thank you. Oh, shit. And I had some FXI calls I bought yesterday. Let's see what happens to them. The idea being to dump them on any smell of positive news. This is not a long-term investment or whatever. This is a lotto on that. If we should break below here, then we have the 59.50 market maker short customer long negative gamma locally strike that becomes potential magnet reversal trigger pull down to over here. We also have the bottom of the straddle range here. So this would be the magnet and the stall down here. If we get below that, I saw something around the 25-30 feature, more on the heat map. We'll look at that. Then we have the whole 5900 support zone. Okay, now I'm going to switch gears to if anybody wants to speak. What happened? My boy Flash left. Okay, maybe he went to take care of his business. Now I'm going to switch to options depth. If I could find it. Here we go. All right, let's take a look over here. Let me see if Ivan texted me anything. I don't see anything from Ivan. Okay, so here's what we're looking at. This is market maker positions. So this is where the market makers are. Market makers are long here, stall, 59.85. That's where we're supposed to stall. If we get over this, then we kind of have an air pocket here. And then as we come back down, they buy. As we come back up, they sell. And we have this big bounce zone here, 30 and 85 with 6,000. Kind of the way the math works out, there's not much here. A little bit of long calls. So we have this potential runway here. Doubtful, but we do. Now, here's what I was saying about the 59.50. To the downside, we have this 59.85 area, but remember, as we head toward it from below, they sell, but then as we recede, they buy. So we kind of have this next zone between 50 and 85. But should we get far enough out of the orbit of the 85 down towards 65, yesterday's low, maybe buyers come in there, not much there, then this 50 becomes kind of magnetic. We got customer long, dealer short over here. And then should this break, is really not here locally in the 0 DTE. Now let's take a look at the heat map. The heat map, which covers the whole structure, gives us a more complete picture. And I'm just going to kind of zoom in a little. Actually, I'm going to do that somewhere else because I don't want to have to mess with the view. I'm going to go to market maker exposure here. And we're going to look at the heat map over here. And we're going to zoom in on the relevant features. Here we have a flip right here at 60, but that's a bridge too far. And that's out in the chain. So what that's telling us is if we can get going, that becomes an area where we're going to be looking. All right, let's see what happens over here. Okay, so here's a 59.50 potential magnet, becomes stronger at the end of the day. As of right, at noon or 11 o'clock, there's really not much strength there. Here's a free to move around the cabin zone. Here's a positive gamma support resistance at 85 we were looking at. But you see throughout the complex, we have this 59.30. We have this area that's providing support that's not in the 0 DTE. And we have all the flows coming from the 5900 that should keep us buoyed. So I see, man, that's me. I'm going to be looking to sell puts. If I can get below 5,900, I'll be thrilled. If not, I'll look in this area. I might buy some flies centered around here, especially if we go up. Just cheapy lottos for now. Whoops, I didn't mean to do that. Let's reset it. How do I reset? Control R is always a good. And similarly up here. Let's take a quick look at charm. Charm is how we decay. This is much better for the end of the day. And again, let's just sort of look at the charm influence for the day. We tend to close below the suppressive on this borderline here. So as of right now, and things will change as time passes. One thing we know for sure is time is going to pass and options are going to decay either to a 0 delta or a 1 delta. And so here's one potential pin area somewhere between the 59, basically our chop zone with up here. That's one main area. If we can get through this suppressive charm up here, and we get the 20-30 zone, and then, to the downside, remember I talked about this area. So as a put seller, I'd like to be, I'd like to have this support above me. I'd like to have this support above me even better. And that's basically what I'm looking at. Oh, there's Ivan. Ivan, you want to comment? I can put you in the stage if you want. I
Hey,
put you in there, Ivan. If you want to speak, go ahead.
good morning. How are you, Doc?
I'm great. Good to see you, brother.
Likewise, likewise. Yeah, I just jumped in. I don't know if you what exactly you spoke about, but I just heard you talk about charm. I'm really, a level trader. So basically, I'm looking to play what's in front of me. So 59.85 obviously is where we're currently trading right now. If we're able to open above that, we have a nice little push, in my opinion, to about 6,020 and possibly even 60.30, right? But if we're unable to open above 59.85, I'm still favoring a move back down to 59.50. And below 59.50, we could get a big hedging response for a move lower.
Now, you're usually an E mini scalper, right? Or how do you usually do it? You still there? We lost Ivan. I think Ivan is usually an E mini scalper, but he does options too. I've traded alongside him. He's good. I made some money with Ivan on Meta. I don't remember when it was, back in February, maybe into February OPEX or something. Ivan is good. So hopefully Ivan will come back. If not, um, anyway. And so now Ivan is more price action based, but obviously he uses Gamma Bigly. So my take is it's going to be hard to get through all this crap. But if we go back to options depth, which I'm doing, I go back to my dashboard, over 85, we do have that potential to 2030, which is what Ivan was talking about. He was looking at that. And that's what I'm seeing. So let me take a quick look. Let me switch gears here. For those of you that are IC people like me, I don't know why my platform hasn't refreshed here, but that's okay. All right. So I see juice right down here below 59.80, below 5,900, 40 cents. Not a lot, but I'm willing to put in one at 40 cents. And I just kind of use these as range finders for the day. One at 50 cents, 45 cents. And I'm just willing to let that sit there and see if it works, if it fills. I call those my wish trades. I'm not worried about that. To the top side, over 50, 60, 50, there's juice. So 55 away from the round number, there's juice. I like it. One, two, three. Let's see what happens. And even at 60, it looks like there's juice. If I can get 50 cents, 45 cents for that, I'll take it. And that's it. Now, if I were, I know some people like to trade them tighter with less risk. If you want a tighter, less risk one, when I say juice, I mean premium. So if I look over here, that's 65 cents. That's not bad. And where would I go on the bottom? Remember we said 59.30. So, something like this for a buck 10 on a 10 wide. I like that. Hey, Victoria, that's decent. I would put in one much tighter risk reward. And then for like the 16 Delta crowd, today is not a bad day to play the 16 Delta game. About a third the width of the spread, a third to a quarter the width of the spread. 125 on a five wide is not bad. I'm going to put one of those in as well. Now, understand that I actively manage this stuff, and this is not something that you're going to set it and forget it. Although, what I typically do is I'll buy back 50% to 65% buy to close, and that's that, and leave it. Okay, my buddy is back. 60% buy to close, 50 to 65% buy to close and leave it. And then I will add opportunistically on pullbacks to puts, on on pops to calls. If I see something that makes me nervous, I'll close out at a small loss and look to reposition rather than wait for a 2x or 3x stop loss. I'd rather lose 10 cents and reposition than sit there like a deer in the headlights and be distracted by something moving against me. At the same time, if I'm confident about the level, I'll be 3x, 4x loss. I'll be down $3,000 and not give a whatever because I know it's a safe level. So it just kind of depends. Just kind of depends. And for those of you that are subscribers, we're in the chat. Do I lose money sometimes? Sure, of course. Um, haven't in quite a while on my zero DTEs, I have to say, but it's been a great market for it. There's times to do it. There's, to everything there is a season. There's times to do it and times not to do it. Into an options expiration, compression, especially when we have clear levels like this is when iron conduit traders can make hay. When we have negative gamma or we're unclenched after a VIX spree and after a quarterly OPEX, that's when our levels are fuzzy. The higher VIX is, the fuzzier levels are because of the way the deltas expand. And maybe one day we'll do something about that. And I think I'm going to end it here. I'll pop back onto YouTube later today. Hopefully, I can grab my brother and get him on YouTube, Binkus, to do some of his scalping, and he'll share his secret sauce as well. I'm the technological guru of the family, and I can barely turn my computer on and off. So between me and my brother, You know, I'm the baby at 72. So between me and my brother, this is like a brave new world. So, but we're figuring it out. Okay, everybody. Thanks a lot. Play safe. Bye.